Hello, ladies and gentlemen. Welcome to today's Outlook. I'm Joseph Novichkov, Senior Trading Manager with GDM. Firstly, we're going to start with the dollar bulls. They were on the defensive side on Wednesday, early today in the Asian trade. After, of course, we saw yesterday Federal Reserve Chair Janet Yellen's caution tone. After, of course, wondering if there will be even one more hike in the US interest rates this year. In, of course, a speech to the Economic Club of New York, Yellen stressed the need to be cautious in, of course, raising rates and highlighted external risk, including low oil prices and, of course, slower growth abroad. Her stance, of course, was mindful, and, of course, the traders were closely monitoring the statement, followed in a contract to some of her colleagues who last week suggested another tightening may be just around the corner. However, after Yellen spoke, the dollar index, as we've been tracking at this particular time, slid about 0.8% in its biggest one-day fall in nearly 2 years. Of course, it was slightly lower at 95.135 in Asian trade, languishing near its session low of 95.071. The greenback, of course, dipped about 0.2% to 112.43 yen after bumping to a nearly 1-week session low of 112.39, moving further away from a nearly 2-week high of 113.85. That was a price that was touched on Tuesday. Of course, the yen firmed even as dismal data released early in the session, heightened speculations that, of course, Japan will need to muster more stimulus to avert another recession. As we've been tracking the data that came out throughout the beginning of the week, of course, we saw the factory output fell about 6.2% last month from the previous month. That was the biggest tumble since 2011, when, of course, devastating earthquake, tsunami, and nuclear crisis disrupted Japan's economy and, of course, its supply chain. Also, we've been tracking the greenback that lost just a bit of ground against the euro, which was last steady at 1.1293 after popping up as high as 1.13. That was overnight throughout the Asian session, within sight of its month's peak, of course, where we've been tracking this since March 17, around 1.1342. Yellen's dovish remarks, however, prompted investors to buy US Treasuries on the expectation the Fed will take, of course, its time to hike rates, and the lower yields were also undermined by the demand for the dollar. The yield on the benchmark, which was the 10-year maturity Treasury notes, stood at 1.810% in Asia after, of course, skidding to a 4-week low of 1.805% in US trade on late Tuesday. Also, we've been tracking slightly the commodity currencies. They also gained around the same time after the dovish statement from Janet Yellen. The Australian dollar was above the 76 US cents at 0.7624, within sight of an 8.5-month peak of 0.7681 that was set on March 18. Also tracking the sterling, it broke above a very important key resistance area at 1.44 that was overnight, pulling further away from a 7-year through that was at 1.3836 set on February 29, as of course the market has just for now put aside the Brexit jitters, but just for now. It was last steady at 1.4374, as we're also tracking gold in the commodity sector. It holds 3 sharp overnight gains on Wednesday, buoyed by a softer dollar. And of course, as we've been tracking, the Federal Reserve Chair Janet Yellen's remarks the market that actually digested the information throughout the Asian session, and of course the US central bank that should be very cautious in raising rates anytime sooner. Gold was little changed at 1241.94 an ounce in late Asian trade, after gaining about 1.7% on Tuesday. Gold, as we all know, is highly sensitive to US monetary policy, as of course rising interest rates lift the opportunity cost for holding non-yielding bullion, as of course while boosting the dollar itself. The metal slid about 3% last week after, as we saw, hawkish comments from a lot of Fed officials. Tracking also in the energy sector is a very interesting picture over there. Oil futures rebounded in Asian trade on Wednesday, also buoyed by a forecast for a less than expected build in crude oil stockpiles last week. However, a weakening dollar also lent just a bit of support, but there are concerns that still remain that a 2-month rally was fading in an oversupply market, which of course is going to put a ceiling on those gains. We're expecting crude prices to fall just a bit today. However, they were rising early today in the Asian session, 45 cents to 38.73 a barrel, after ending the previous session up about $1.11. Of course, we're expecting the Energy Information Administration, which is due to release the official inventory data later on Wednesday. As of course we saw yesterday, the US stocks, however, rose last week by 2.6 million barrels to 534.4 million, as of course the data from the industry group, the American Petroleum Institute, showed on Wednesday. And of course later today, in about 5 hours time, we're expecting the CPI from Germany. That's all the important news for today. Thank you very much for joining us. I'll see you next time. Bye-bye.